Hey, welcome back. Today it's Tuesday, June 16th, and the market was down and mixed. The Dow had another strong day, bonds caught a bid, but tech was the weak spot, especially the Nasdaq and the higher growth AI side of the market. So let's run through the indices, sectors, and a few names and trades, the weather report, and talk about what's coming up tomorrow. So quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you so much to everybody who's subscribed. I really appreciate it. If you haven't yet, please subscribe, like, comment. I respond to everybody. Now let's jump into it. So let's start off with the big macro news from today so we know the backdrop. And the biggest story was that the market is still reacting to the U.S. Iran peace deal optimism. So oil fell sharply again, and that helped calm some inflation fears, but the market didn't treat that as a full risk on signal today. And that's largely because of the second story, which was what's happening tomorrow. Tomorrow is the Fed decision. So even though there was some relief in energy and geopolitics, investors are still waiting to hear what the Fed says about inflation rates and the path forward. And of course, there was both some digestion from yesterday, as well as some positioning going into tomorrow. And the third story is clearly that we had some rotation. So not geopolitical or macro, just what's showing up in the tape. The Dow and the more cyclical parts of the market were stronger, while tech, chips, and some of the AI momentum names cooled off. So let's look at the individual indices now, because today was relatively mixed. So SPY was down pretty close to a round number there on 750 and 33 cents, down about 0.6%. The QQQ, on the other hand, underperformed that and was down 1.9%, closing under. We were looking for it to hit 730 today, but we could actually see that the pivot line it hit it almost to the T, as it always does there, or often does. IWM, on the other hand, was down, but not quite as much, down 0.87%, closing at 292, also almost right to a pivot point on the T, the S2 level. As I said, the Dow was actually up today. It was up 0.58%, closing up at 521.44. And then the last thing to look at is TLT, because bonds actually caught a little bit of a bid today. It was interesting. They had been down over the course of yesterday. They had that pop up in the afternoon, in the late hours. My afternoon, I'm on the West Coast here, and then faded all throughout yesterday's session and then caught a bid overnight. And then again, today we're back up. So we're kind of ranging in this zone as everybody's positioning going into the FOMC meeting. But TLT was up 0.57. And there's a lot of reason for the moves today was that the market was digesting that prior big rally. I mean, QQQ yesterday was up 3.18, I think, something like that, over 3% for sure. So coming down 1.9% today isn't the craziest move in consideration of what happened yesterday. And then, of course, we had that geopolitical relief from the Iran deal. But at the same time, when tech gets hit like that and semiconductors are weak, traders are not likely going to get aggressive right before a Fed decision tomorrow. So that's kind of a quick read on that. We'll get into it more when we get into the weather report or forecast, if you will. Now let's look at the individual sectors. So if we start with XLK, it was down quite a bit. Technology, of course, so it was down 2.8%. Industrials, on the other hand, XLI was up about 0.65%. XLY was basically flat to slightly down at 0.09% down, and XLC was similar, flat to slightly up at 0.12% up, so 0.12%. And it gets more interesting when we look at XLF, which was up 1.5% today. It did pretty well. And so it's interesting because this is right before the FOMC and it's been floating upward. And I just want to address something that's been floating around online. So some analysts are starting to speculate that the Fed may again exempt U.S. Treasuries from the supplemental leverage ratio, repeating a pandemic era policy that allowed banks to hold massive amounts of government debt without hitting capital limits. So that's reinstating this exemption that happened during COVID, and it would give banks the regulatory freedom to significantly increase their treasury holdings. So I just wanted to mention that while this is trending upward and just floating towards the meeting. It could be a sell the news kind of event, or we could actually see some type of policy shift or some type of policy shift being mentioned, or the speculation being affirmed or denied in some manner. So I'm just watching that very closely. I tend to watch XLF when we're starting to hit highs on the indices. Next, let's look at XLV. Unremarkable in many ways. It was flat to slightly up at basically 0.03% up. Same with, XLU, pardon me, was up 0.7% today, did pretty well there. XLE, on the other hand, took a bit of a hit, but actually not as bad as we would have thought, especially because there was some news today about Iran being allowed to ship oil immediately. XLP, let's give that a look there. It was flat. That's what I was about to say when I pulled up XLU previously. But XLP, the consumer staples, was basically flat today at 0.15% to the upside. XLRE, I've been watching closely because we've been watching IYR and IYRI for me specifically. But the real estate ETF closed up just 0.2%, about 0.25% up. And the reason for all these moves was pretty clear. Technology was the biggest drag today. And the main reason was the QQQ underperformed so badly. Financials, industrials, utilities were much stronger, which tells me this was less about panic and more about rotation. So it wasn't entirely a bad thing, especially after what happened yesterday when tech totally outperformed the SPY. QQQ, like I said, was up 3.5, 3.2. I can't recall exactly what it was up yesterday, but quite significant, whereas SPY was up but much less. And so it's not surprising today to see QQQs pull back more and financials, industrials, and utilities outperform comparatively. And so the market wasn't a sell everything kind of mode. It was selling parts of the AI and tech trade while money rotated into Dow type names, financials, defensive yield areas, and bonds. And I do find that to be compelling given what's happening tomorrow. And so the weather report briefly today is this: the market is still constructive on the surface, but tech leadership got hit. And when tech gets hit hard, you have to respect the risk that the Nasdaq needs more time to cool off. And so let's jump into the stories of the day. There were a few big stock stories today, and the first one is SpaceX. So SpaceX continued its huge post-IPO rally, and the options debut, if you didn't notice, options hit the market today for SpaceX. The options debut created massive attention around the name, and that became one of the biggest stories of the entire market because it pulled so much focus into a single high-profile growth stock. And interestingly enough, a lot of people thought that was maybe why flows were down on SPY and QQQ, and that a lot of major funds are starting to pick this up because not just the Nasdaq and the SPY and the ETFs that track them are the only ones to worry about, but some other like large cap funds or growth name funds are starting to pick it up. So it's something to watch. And then as soon as you start having options, it can be put into covered call funds and funds that deal with options. So there's a lot of attention on that right now. And for the third day of trading, that's quite a significant story there. And then the next big story was Nvidia, which was down quite a bit today, negative 2.37%, although it is catching a little bit of a bid in the after hours here with a little bit of a liquidity sweep, which I tend to trust in the after hours on Nvidia since it's much more liquid than a lot of other stocks. But basically what happened was it was a weekday because they announced a major corporate bond sale. And so the stock was down, and because Nvidia is such a major AI bellwether, that weighed on the broader AI and semiconductor complex. So I think that's a lot of why we saw some of that rotation out of it. But sometimes those pullbacks are kind of normal. Like I was saying yesterday, I wouldn't have been surprised for QQQ to pull back. And in fact, we're coming right back to this spot here. I would have expected 725, which is what I'm looking for tomorrow for scaling in on certain things. But let's continue on the stories here. And the next one to talk about is Yum Brands. And so this basically what happened here was it moved higher after announcing the sale of Pizza Hut. And that's a major portfolio reshaping move. And the market seemed to like that cleaner focus on Taco Bell and KFC. But I actually read some other reports which are a bit less about what they're still holding and why they sold Pizza Hut, and not just because it wasn't doing what it needed to do, but they're basically selling it to use the funds to fund their AI strategy. Here's a story here, which was on Barron's, but if you're on Thinkorswim, you can also read some of these stories. So that was kind of interesting. I think it's a telling sign when even the restaurants are getting into the AI game. Although we know that, Coca-Cola and Pepsi have been pushing it hard too. Those are interesting stories to look at. Let me know if you guys want to see some of that in next videos. Leave a comment or two about it. And then we also had Olin and Huntsman, and those stocks were both hit after their merger announcement, but I don't want to cover those quite as much. It just showed up as some big stories for me today. So the story of the day was not just index movement, it was rotation, AI fatigue, big M&A stories, and the market waiting for the Fed. All right, so let's look at the SPY on the weekly, the daily, and the 4-hour just to understand where we might be going for tomorrow. And so on the weekly, here we are looking at, the trend is still strong. We are still near the highs, and nothing about today destroyed that larger uptrend. Although I do start to watch for a double top or a lower high, which I would mark out at this point right here, because I would be concerned about that for sure. I always am. And these are the kind of things where people think that we're going to keep going up if they haven't looked on the weekly or the monthly. And so I always like to be conscientious about that, especially because I've indicated before that when we hit round 500s or thousands, so like on the ES or the MES 7500, we tend to chop between 7,500 and 7,000, just how like we would chop between 6,500 and 7,000, that kind of thing. And it wouldn't be odd after such large weekly moves. If you see, these weekly moves have been much larger than many other weekly moves that have happened over the course of the last year or so, or maybe even 2 years. Big candles, I wouldn't be surprised for a pullback in time with some digestion. And again, this is not odd given what happened yesterday, just in the near term. And so let's go and look on the daily there, because some of those topping patterns look a little bit odder to me in general too. I'm going to remove this drawing. It doesn't draw quite the same on there. This would have been the top, and that would be where we were yesterday. Although if I do look on the weekly, I just want to clear up something. When I see things like this, where we have this flush below and a liquidity sweep, if you will, pushes back higher, that's not always incredibly bullish to me. Sometimes that looks like the next lower high for me if we don't reclaim the candle before it. So I'm always cautious around those areas, if you will. But on the daily, what I would have liked to see happen today is a pullback to 77.45. And you can see I also had an alert there, because what that would have done is that would have filled in at least some of the structure, pulled back to the 20 SMA on the daily, so that come tomorrow, we don't have this massive gap right there, because that's something I'm worried about. And well, I'm not worried, but that's something that I would see as a potential issue for bulls to be bulls on parade, so to speak, meaning it's not the most bullish thing that I could see. And I would have liked that pullback. I had my alert there. But when we zoom in on some lower timeframes, you're going to see how I was thinking about that. But this is an area to be watching. And if we look at it on the Qs, the thing about it is tomorrow is going to be volatile. It most definitely is. And I wouldn't really want to be trading tomorrow anyway, unless I was scalping, swing trading, or waiting until the market digests certain things. And even then, I wouldn't be trading unless we hit pivot points. And if you look at where the pivot points are, let me actually turn off the after hours on this. The pivot points are go down all the way to 705 tomorrow. And that wouldn't be odd for me, because everybody's watching this gap fill. And again, I'm on the Qs now. I've skipped over from the SPY just to look at the Q, because tomorrow's going to be volatile, and I want to show how volatile it could be. The 200 on the hourly is at this first, this is S2, so it's the second actually pivot point. And it's also the range of that breakout. So that's a real interesting spot for me to be watching, and I think everybody's going to be watching it. And it's not unusual for the QQQ to overshoot. And a lot of times people think that when it overshoots, I will just grab it a few dollars lower. But I like to think a few dollars lower than that, and I only tend to target pivot points. So for me, there's no swing trade tomorrow on the QQQs unless we get down to 705. Other than that, maybe there's a few scalps here and there, but I'll let my algos be handling that. And so that's just a high level read about what's going on tomorrow, but we don't have the structure I would have liked to see in order to participate to an upside rally. I'd be more interested in participating on TLT, which is coming back alive, or TMF, which is also coming back alive. I'm heavily allocated to both of those. And so let's talk about a well-known technical thing that happened today, which is that divergence between the Dow and the Nasdaq. And so the Dow was up, like I said, 0.58, which isn't massive, but it becomes more interesting when you see how badly the QQQ did. But of course, like I said, it was pulling back, even though I would have liked it to pull back more, or to have had more days to pull back before tomorrow, so that this gap would have been filled at least, or overshot and then reclaimed, so I know what's going on from a trend standpoint. Because for me, this isn't the strongest uptrend on the daily. You know, we talked about the weekly on the SPY, but when we talk about the daily on the SPY, some people won't even see this as a full uptrend. And I tend to not actually always think of this as an uptrend when my super trend isn't working. And even if it is a trend, it's not a strong enough one. We have reclaimed some of these levels, but we haven't come back down and then reclaimed them. That's what I actually want to see a new trend. And you'll miss a lot of trades doing that, but that's, the way in which I trade. I want to identify these trends and then confirm these trends. I don't want to front run it. And so back to the QQQ there, like I said, when the Dow is strong and the Nasdaq is hit hard, that kind of divergence usually means the market's rotating. And we saw that when we looked at the sectors. But that also means that the leadership could be changing or at least cooling off. And that's really important because the reason that we're at these levels is because SMH brought us there essentially. And we could see how that did. It did actually fill in its gap. So it is interesting, but I would want to see that reclaimed because right now I'm basically just seeing a double top here. And this is overextended. So a lot of people know who have been watching this channel, I'm allocated and I've been slowly dollar cost averaging into SOXS. And I've done a video on MSFT where I talked about MSFU and how you have to use leverage products, not you, but one would use leverage products and understanding volatility drag and rebalancing for how you dollar cost average into them. So this isn't just like I'm buying it because it's down or I'm buying it because it's up. It's actually calculated in a certain way there. But you could just have picked up a few puts or put spreads. It would have been the move for me on SMH because IV was pretty elevated. It's come down quite a bit. But if I didn't want to be worrying about IV, I would have bought a spread on those for my puts. But anyway, my point is if SMH is just not rallying to the upside, I don't expect to see the indices rally to the upside. Instead, I tend to think that we'll have some chopping or a pullback in time like we did here where things were rotating. We didn't break down necessarily. And so that's likely what I'm seeing in the indexes for tomorrow and in, the next few days, although everything can change after tomorrow. And like I said, I wouldn't actually be taking any trades tomorrow unless we're coming down into certain pivot points. And even then, I am unlikely to be making those trades. So tomorrow the FOMC decision happens and the press conference, and the market's not only watching whether the Fed holds rates, it's watching the tone. So if the Fed sounds more hawkish, that could pressure tech and long duration growth stocks. But if the Fed sounds calmer, then tech might get a chance to bounce. And so the rest of the week, we also have to, watch how the market's reacting to oil, the Iran deal headlines, bond yields, and the shortened week in general with the Juneteenth holiday coming up on Friday. So for now, the question's simple. Does the Fed allow this rotation to broaden out, or does it create another reason for traders to keep taking profits in tech? And so I'll be watching that very closely, as I'm sure everybody will be, but it's a lot better to position thereafter in general for my style of trading. And so now let's do just a super quick trade check-in because this video is getting long. All right, so on the trade check-in here, let's just check in on a few that I've been posting about recently. So CRM is a trade that I've been interested in, I've identified recently, and it's still looking good as far as some of the technicals here. We haven't lost the 160 range, and actually in the video I made, identified 160, 150 as a real institutional buy zone. We did, and the thesis was also that we could dip below a little bit, but the question is, where are we in a few days from here? And what I actually like about it on the hourly is that we still have divergence. We're making lower lows and the RSI is starting to make higher lows on the way up. So we are having some bullish divergence on multiple timeframes again. And so for me, this is still right at that major decision zone that we were talking about. And the thesis hasn't really changed. I just wanted to check in on it because this is not like a chase the strength setup. This is a defined risk turnaround setup near a historical support area. And you can check out that video on CRM somewhere on your screen. I'm going to post it. But if CRM can hold this zone, this setup is still really interesting for me. If it loses cleanly, then I wouldn't want to fight the tape, but I am watching it closely. So the next one is Microsoft, or MSFT, and also MSFU. So this was an interesting one here. We were watching it real closely, and I actually do like the price action that's happening here. It might not seem like it at first because we're down 1.5% essentially on the day, but for me, this is still right in that major decision zone that we've been talking about. And the interesting part about this is that we had this reversal here today that started to happen based on the last place we dumped, essentially resistance turning into support albeit on a small time frame. But I like that because it still shows me that these participants are still trapped down here. Anybody who went short or anybody who went long is still feeling good about this. So I do like that zone, but in general, this 390 to 400 zone is still an important decision zone. So if buyers defend it, this can still be an accumulation area. And as you know, I'm watching 385 because I'm picking up long-term shares here, but I'm also dollar cost averaging into MSFU. And we were talking about that. And I have a number of options plays. And let me know if you want to do a video about the trade architecture on this one, because it's a very complicated multi-portfolio trade for me. So it's not as simple as I just need it to go up today. That's not what I'm looking for here. I'm looking to play the fundamentals as well as some technical levels. And this is still really looking great for me on the daily. So just wanted to check in on that. And then also now, ServiceNow is one that I've been watching. I didn't love the action here today on this. Software really kind of got hit there. And it's one that I really do believe in the long run. And I'm seeing what I saw in CRM here, where we had this series of the RSI divergences, and we could see it on other timeframes as well. But that is compelling, even though I didn't like this candle. What's interesting about it is when you look at it on the daily, it looks like we're about to break down firmly. And while that could be true, I don't have a problem playing it in this trading range that we've identified from 93 up to 100. And so it doesn't change my core thesis right here, but it's definitely something I want to watch because we are in a decision zone here. And I will be rethinking that if we go below. So just wanted to check in on that. And of course, let me know in the comments if there's any other tickers you'd like me to consider. You know, I'm checking on the trades that I've been talking about, but each day I'll cover as many requests as I can here. If in your comment, you let me know what ticker you'd like me to talk about, and maybe even what you'd like me to talk about each one of those tickers. All right, so those are the main trades just to check in for today. Of course, there's a ton more. Like Conagra has been an interesting one. I know a lot of people have been talking about it. I think that we may have found a bit of a base that we're starting to hit this regression channel really nicely. And so this is one I'm invested in for a very long time, and we have some divergences there as well. So it's going to be a really long play. This is not an options play. This is you're investing for the long term here because you think it's fundamentally mispriced. And I really do like this. I am on the weekly here. This is one of the best bullish reversing patterns that you can see. And seeing it on the weekly where we get that liquidity flush and then we come back up and we reclaim the previous candle with a completely bullish engulfing candle. That's the kind of thing that I dream about for sure. It's nice when they happen on growth stocks because then maybe you could play it a little bit more aggressively, but it's an even bigger turnaround than it was a few months ago. But again, not financial advice, it's just how I'm investing. And I'll stop it there because I could go through my whole portfolio and show you a lot of setups, but I will do that in a different video maybe over the weekend. Well, that's the market recap for today. So thanks so much to everybody who subscribed, commented, and liked. It really means the world to me. And if you haven't subscribed yet, please do. It makes making these videos worthwhile for me. I do regular market recaps, new trade setup ideas over the course of the week, and some really deep technical dives. So like Wyckoff analysis, multi-timeframe analysis, that kind of thing. And leave some comments and I'll do some topics that you're interested in. Thanks so much. Happy investing and stay safe out there.